whenever we see a certain scenario when we're trading, right? For example, if you're getting ready to set up a buy or a sell, there's a couple of things you're looking at. For example, in this particular case, when you see something like this and you're like, okay, well, I'm going to buy. Okay, and you enter in your buy somewhere around here. Okay, and then you enter your buy somewhere around here. Where would the average person put his stop? Okay, I'm going to ask you guys, where do you think the average person puts his stop? Okay, under the wick. There you go, under the wick. Below the low. Okay, so now watch how when I asked you guys this question, everyone started up and they knew the answer. Why is that? Okay, because this is the trend that is taught. I always say this in my webinars: is if you want to stay ahead of, if you want to stay ahead in trading, you don't need a special system, a special software, a special guidance, a special guru or mentor. None of that's needed. Only thing you need to know is what does the rest of the world know, how are they trading, and how do I get in on the other side? Okay? Because for me to make money, somebody else has to lose money. Okay, whenever I make money, the bank won't print special notes for me. It's coming out of someone else's pocket, which means the other person has to lose. It's in my best interest for the other person to lose for me to make that money. Okay, so always remember that concept. That is the generalized idea of the 95% against the 5%, or even less now, probably 98% against the 2%. Okay? It's not the unique strategy or the trading system or all of that nonsense that's being taught online. It's the simple fact that keep up with the trend. What's the trend right now? What, price action? Supply and demand? Support and resistance? Okay, keep up with it. Find out what's hot in the market, the general stuff, and then if you know, for example, if you're selling here, you're like, okay, the market's gone too high, you know, it cannot go any further. Look at all these wicks popping up. You sell and you keep your stops above this wick. Well, the market did go down, but after it took you out. Okay, what are you going to do? Keep no stops? Okay, so always have this in mind that hunting your stops, whether it's a broker or anybody, it's in their best interest. So sitting here and crying about it or screaming and complaining, writing letters to the NFA, whatever you're doing, it's just no use because this is how the industry works. Your loss is in the next person's best interest. Okay? Alright, so alright, now let's move on forward. Now, we're all aware of money management techniques, which is like, okay, well, let me see if I can get my notepad out here. Okay, we're all aware of the money management techniques, which is simply like this. Well, whatever your account balance is, never trade more than 2%. Okay? Let's say your account balance is $500,000. Okay? You have that kind of money sitting in your Forex account. 2% is how much? 10,000? Okay. 10,000 US dollars is your 2% of $500,000. That means do not risk more than 10,000 US dollars per trade. Let me ask you this. Do you think that person who has $500,000 in his account, he goes and he spends $10,000 on an average day? No. So your risk should be very closely correlated to your lifestyle. You know, numbers will be numbers no matter what. You know, there's always going to be numbers, there's always going to be rules, but what does it mean to you? I can sit here and give you definition after definition, and you're going to be like, okay, A plus B is equal to C, and stuff like that. I can give you definition after definition, but that has nothing to do with anything if it doesn't make sense to you. So, educationally speaking, they're saying 2% is the ideal way to approach trading. But your risk needs to be correlated to your lifestyle. Here's why I say this. Because, for example, if you're trading, right, and you have $500,000 of an account, but on an average day you spend no more than $200, you simply cannot trade risking more than $200 to $300 in a single trade, because you're not used to seeing numbers fluctuate above or below that. Okay? If you spend an easily $200 a day or $100 a day, whatever it may be, it won't bother you if you lose 100. Okay? If I say you lost $1,000 today, to some people it's going to be like, oh man. And to some it may be like, okay, you know, I'll deal with it. If I say you lost $10, everyone in the room is going to be like, okay, big deal. It's like McDonald's. Because that amount has a lesser psychological impact to them. Okay? So make sure your risk is very correlated very closely to your lifestyle. What is a number that you're okay seeing on your screen move up and down? That has a big impact when it comes to trading as well. So I know the books tell you 2%, and maybe the 2% just might be too high for you. Okay? Or it might be too low. If you have an account that's like, for example, $1,000 account, 2%, you're going into micro lots. That's probably the best way, because then you're not feeling the numbers. It's not affecting you. All you need to do is pick up the right pattern in trading, and then you scale it from there. Okay? All right. Next thing. There is a cycle of the traders. You know, when every trader begins, there's a cycle. You know, you start off as, okay, when you first start off, you do quite well. In fact, most people do quite well when they're like just getting into Forex, because they don't know crap about Forex. Okay? They're just starting off, they're just looking at the markets, they're like, looks like it's going down. Okay, I'm going to sell. Or it looks like it's going up, I'm going to buy. They look at the market as very pure. Okay? All they look at it is sell and buy. They just flow with the market. Okay? And they do quite well. Okay? Then comes the greed. And at this point, disaster strikes in. Okay? You do too well either on your demo or on your live account, and then slowly you're like, okay, I got this. This is easy, you know. I can do this. You open up a live account, fund that account, and greed kicks in, disaster.